All right, it's Leo the Delta Trader back with another video. We are currently up $865 on the account so far within first month and some change. Currently in just today, we are up $180. Um, I would say most of that is just the option stabilizing, and also I made a pretty big switch on Dollar General halfway through the day. I think I'm over trading. I went for a lot of quick in and out plays that are overall profitable, but I don't think I'm soaking enough theta. I'm not soaking enough time on these theta decay plays. Maybe I'm getting impatient with kind of being stuck in a couple of these plays. So I swapped my three-legged Christmas tree, as I showed in some previous videos, into some kind of like inverse four-legged position to start unwinding it. And so just to give you an idea of what this position looks like currently, it looks something like this. So it is pretty much, I would say it's primarily a a bear call spread now. It's like a bear call spread, and I'm not expecting it to, or I don't want it to jump up 5% in the next, week or so. So if we look at Dollar General now, it actually had a really Dollar General right now, it actually had a pretty strong rip upward. I'm not particularly expecting a lot of strength in retail as we come into this question mark of tariffs as well, although they are a good company overall and they'll probably weather the storm. We see this week-long rip all the way up from -5% to pretty much a 5% rip. And I was expecting this to kind of rip up, but I wasn't expecting it to be able to climb up and maintain this. So what I ended up doing is I ended up capping a reverse position, basically saying that it won't hit, what do I have this at? Like 77, 76 by the end of it, which is pretty much somewhere like a little above this trading range, which is like kind of historically where it's been at for a while. It's a pretty high trading range for it to break above. Um, I don't think there's a lot of necessarily eyes on Dollar General right now. I do think it is a value play, but if a tree falls and nobody hears it, does it really fall, right? So right now, because I'm in this position, one problem with this position is it does lock up a lot of capital. I have about, close to 1,600 in collateral locked into this new position for only a 220 dollar max return. So 220 divided by maybe about a 13% return. So we basically turned a 10% return into a 13% return by only throwing an extra like $500 into it. I guess, wait, maybe I could say um, option spread value. Uh, yeah, like a 13% return. Yeah, we have max risk of 1,600. So, I mean, yeah, was it overall a fair enough position to take? I think so, but is it that much better? Not really. I think I've kind of been scraping a little bit, trying to, make and force a couple of plays after getting ripped, which probably isn't the best mentality to have, but we have been able to claw back something in this time period. And we do have some good positions. Um, I would say our Nvidia's been doing pretty well. Three-legged option, I still have some faith in it. Um, just because the premium on it was really high. I actually do kind of want to hold on to that, even if I get stuck on the tail end uh, piece of it. ASML, we opened up some. Well, I guess we did open up a couple more. We opened up a gold debit spread, so GLD. I don't think this is anything necessarily spectacular, but even though we have this fantastic run, on gold and we see this pullback here, I'm expecting this to bounce and stabilize, still strong. I think a lot of people are starting to hedge more into gold. I think governments are starting to hedge more into gold. And yeah, I bought a fairly in the money bull call spread, so I'm not requiring a very high move. I'm not expecting a very high return, but it is kind of a bull call spread. I would say probably like 70, 80 delta. And then the other position was this ASML. This is that kind of synthetic condor I went for. Um, Fairly high implied volatility. I believe it was no. These are just debit spreads. So if I put on a debit spread, that basically means that I thought the implied volatility was fairly low. So yeah, just pushing this debit spread up. Um, I mean, if we want to get an idea of kind of what its break even looks like, it's just gonna mature into its max profit. So not really expecting a second pullback on this after it had this large rip down. I am bullish on ASML. I think it's in a pretty good position to be able to push forward. And we kind of just took this rip, probably. There's a second rip, whatever. Um, yeah, I think it's kind of been trading in this range. I think I picked it up January 30th, February. Pretty much just on this. See that it didn't fully recover all the way back up to its um, former spot. And I think that it'll kind of bounce, and if it falls back, it won't fall below kind of like this support here. That's kind of where I'm coming from with it. I also think it's a good stock. I think it's at a pretty good value position. I don't think there's anything necessarily intrinsically wrong with it. Um, so yeah, I really think I just gotta kind of hold on to positions, ride them out. One that I am looking to liquidate ASAP is my Amazon position. They do have earnings tomorrow. Just a heads up if anyone forgot. And yeah, we're gonna try to see if we can snag some profit out of it. If not, I may look to either sell part of it and um possibly even like buy a call or a bull call or something like that. Um, because if I can get a bull call in an upward direction, and it pans out off earnings, I'll make money. And if it rips down and falls into that trading range of the Christmas tree, I'll make money. So it's kind of like 50-50 kind of thing. If not, I could just gamble and ride this thing through earnings, which is also like not the worst move considering where it's at right now, because it's so in the money that if it goes down, then that's actually better for the position in terms of percentage profitability. But if it goes down too much, that could be a scary spot to be in. So we're gonna have to see kind of how it looks and what we want to do by then. What I'll probably do is I'll take a look at the value between these spreads and find the expected move on Amazon coming into earnings, and then we'll go from there because generally the expected move is more or less priced into the earnings. I mean, we looked at Palantir the other day, and I mean, the expected move for Palantir wasn't really priced into the earnings at all. So, yep, there it is, available. Says today after hours, but it's really tomorrow. Okay. Best of luck in trading with you guys, and um, I'll be around. All right. Peace.